British pound, known by traders around the globe as GBP, is one of the most iconic currencies in financial history. It's been the backbone of trade, a reserve currency trusted for centuries, and a symbol of the UK's strength in global economics. But when you step into the Forex battlefield, the pound is not just a symbol, it's a weapon. And like every weapon, it's a double-edged sword. For traders, GBP offers some of the biggest opportunities in the market. Its movements are powerful, its liquidity unmatched, and its volatility creates endless chances to capture profit. But those same qualities also make it dangerous. The pound has humbled countless traders who came in with excitement, but left with empty accounts. It rewards discipline, strategy, and risk management, but it punishes greed, carelessness, and hesitation. So in this speech, we're going deep. We'll explore 6 reasons why the British pound is a double-edged sword for traders. You'll understand why it's respected, why it's feared, and how you can survive, maybe even thrive, if you learn how to handle it with caution and mastery. Let's break it down. Point 1T, strength and prestige of the pound. The pound sterling is not just another currency, it's history. Dating back more than 200 years, it's the oldest currency still in continuous use. For centuries, it was the dominant global reserve currency long before the US dollar took that title. And even today, GBP remains the 4th most traded currency in the world. This prestige matters for traders. Why? Because a strong, respected currency means liquidity. When you trade GBP pairs, you're dealing in some of the deepest markets in the world. Tight spreads, high volume, fast execution. That's a dream environment for anyone looking to scalp, swing trade, or hold positions longer term. But here's the catch. The very strength that makes GBP attractive also makes it dangerous. Unlike weaker currencies that move in small, predictable steps, the pound is known for sharp, decisive moves. It doesn't crawl, it leaps. One moment you're in profit, the next moment it wipes away your gains with a sudden reversal. Let's take GBP-JPY as an example. Known as the beast, this pair is notorious for wild price swings. A small miscalculation can mean a stop out in seconds. The strength of GBP amplifies everything, profits and losses alike. So yes, the pound's prestige gives traders opportunity, but don't mistake prestige for safety. The pound is like a heavyweight fighter, powerful, respected, but extremely dangerous if you don't know how to defend yourself. Point 2A, volatility as an opportunity and a trap volatility is the lifeblood of trading. Without movement, there's no profit. And the British pound delivers movement in abundance. On an average day, GBP USD might swing 80, 120 pips, sometimes far more. Compare that to pairs like EUR-CHF, which often feel like they're asleep, and you'll understand why traders are drawn to GBP, like moths to a flame. But here's the truth: volatility is seductive, and that seduction destroys traders. New traders see the big moves and think this is where the money is. And they're right until they're wrong. Because volatility doesn't care about your account size, your strategy, or your confidence. Take a simple breakout strategy. GBP can give you massive wins when momentum runs, but it can also fake you out, reverse hard, and leave you bleeding. The same 100 pip move that doubles your account can just as easily cut it in half. This is why risk management is everything. The pound punishes those who over-leverage. If you're risking 10 to 20% of your account on a single trade, GBP volatility would chew you up and spit you out. If you're disciplined, risking 2% with a solid stop loss, you can harness volatility without being destroyed by it. Think of it this way: the pound is like fire. Fire cooks your food and warms your home, but lose respect for it and it burns everything to the ground. Point 3, the Brexit effect. If you want an example of how politics can weaponize a currency, look no further than Brexit. From 2016 onward, every headline about negotiations, deals, or delays sent GBP into chaos. Traders watched in disbelief as the pound moved hundreds of pips in a single session, often with no warning. Brexit taught a brutal lesson. Currencies are not just economics, they're politics. When politicians speak, traders pay the price. For GBP, uncertainty became the norm. Even today, the aftershocks remain. Trade deals, regulatory changes, and UK-EU tensions still weigh on the currency. What does that mean for traders? It means you can't trade GBP blind. You can't just stare at a chart and ignore the world. The pound demands awareness of news, of policy, of sentiment. If you're trading GBP and don't know when the next parliamentary vote or Bank of England statement is coming, you're gambling, not trading. Brexit made the pound unpredictable, but it also made it profitable for those who adapted. Traders who embraced volatility, managed risk, respected news events, found endless opportunity. Those who didn't, they were crushed. The lesson is simple with GBP. Politics is part of the chart. Ignore it. Pound will remind you violently. 0.14 sensitivity to UK data and Bank of England. The British pound dances to the rhythm of data and central banks. Few currencies react as aggressively to economic reports as GBP. Inflation, GDP, employment, retail sales. Each release can spark moves that shake both day traders and long-term investors. But the real heavyweight is the Bank of England buoy. A single sentence from the governor can move the pound hundreds of pips. Why? Because markets hang on every clue about future interest rates, monetary policy, and the UK's economic outlook. For traders, this is both blessing and curse. If you anticipate the data correctly, you can ride massive waves of profit. But if you're caught on the wrong side, you'll be crushed before you can react. Take rate announcements, for example. Bowie might raise rates, something normally bullish, but then follow it with dovish language about future risks. Suddenly, the pound drops instead of rising. That whiplash catches traders off guard every time. Trading GBP around news requires precision. You need to know the schedule, the expectations, and the potential outcomes. More importantly, you need discipline. Sometimes the best trade is no trade. The pound is hypersensitive to fundamentals. If you respect that, you can profit. If you ignore it, you'll pay the price. 0.5 global influence of GBP USD, the GBP USD, known as cable, is one of the most famous pairs in Forex. Its nickname comes from the first transatlantic telegraph cable laid in the 1800s, which carried GBP USD exchange rates between London and New York. Today, cable is a benchmark pair, second only to ER USD in global importance. Its movements influence and are influenced by global markets. That makes it incredibly liquid and incredibly competitive. For traders, cable offers opportunity because of its volume. You're trading in an arena filled with banks, hedge funds, and the sharpest minds in finance. But that also makes it dangerous. You're up against the best. Every level, every breakout, every trap is influenced by whales who know how to exploit retail traders. The pound versus the dollar is more than a trade. It's a battle of economies. When the US dollar strengthens, cable feels the squeeze. When UK data shines, it fights back. Understanding this tug of war is crucial. Cable can make you rich or humble you. To win, you must study both sides. The UK and the US ignore either, and you're blind. 0.60. The psychological test at the core. Trading the pound is not just technical or fundamental, it's psychological. GBP tempts you with volatility, lures you into over-leverage, and teases you with big wins. But if you lose discipline, it will break you. Many traders get addicted to the rush of trading GBP. They see the big moves and chase them, abandoning their strategy. They win big once, then lose bigger the next time. The pound feeds on emotion. If you let greed, fear, anger guide your trades, GBP will expose your weakness. But here's the beauty. The pound is also a teacher. It forces you to respect risk. It forces you to be patient. It forces you to accept that you're not in control of the market. You're only in control of yourself. If you can master your psychology while trading GBP, you'll not only survive, you'll thrive. Because if you can handle the pound, you can handle any market. The double-edged sword cuts both ways. It destroys the reckless. It sharpens the disciplined into true traders. Conclusion, the British pound is not just a currency, it's a test. It's prestige, volatility, politics, central banks, global influence, and psychology all rolled into one. For traders, it's the ultimate challenge. It gives you opportunities few other currencies can match, but it demands respect. Trade it with caution, with preparation, and with discipline, and you can carve out consistent profits. But treat it carelessly, and it will cut you down before you even know what happened. The pound is a double-edged sword. The question is, will you let it cut you, or will you learn to wield it?